We begin today with what California's insurance commissioner calls the largest insurance reform the state has seen in 30 years.
My strategy is intended to fix this major shortcomings in our laws.
Commissioner Lara isn't doing his job.
But consumer advocacy organizations argue the plan comes with significant loopholes that will actually hurt consumers. And 7 on your side's Stephanie Sierra joins us with the latest.
Yeah, there's a lot to get to. Commissioner Ricardo Lara's latest proposal affects all of us, every policyholder and consumer in California. We heard from one man who saw a 1,000% increase in his insurance premiums just in the past 4 years. And Lara testified to lawmakers today that his plan aims to fix problems like that. But Consumer Watchdog says it only tells half the story.
For the first time in nearly a year since introducing his strategy to regulate California's insurance market, Commissioner Ricardo Lara testified before the Assembly Insurance Committee with his latest plan to reform it.
We are creating an entirely new law, new procedures from the ground up, and we are doing it in record time.
That plan includes promises of removing policies from the FAIR Plan to go back to market, increasing insurance availability, and pledging for more transparency and accuracy in rate making and catastrophe modeling. But consumer advocates say
this commissioner has betrayed his oath of office. He has misled and lied to the public. And we're finally here to say we're going to set the record straight.
Harvey Rosenfield, the founder of Consumer Watchdog, says the plan comes with several loopholes. One of the big ones claims that insurance companies will be required to expand sales in fire-prone areas to at least 85% of what they sell elsewhere.
Well, there's a loophole to that. The regulation actually says maybe 85, but it's okay if you just do 5.
Rosenfield says in the fine print, the regulation eliminates transparency and disclosure requirements, and insurers have no deadline for implementation. Another example, claims to reduce costs and regulate rate hikes. Consumer Watchdog says the proposal actually imposes price hikes from unverifiable catastrophe models.
One of the things they want to do now that they cannot do now is use computer models and software and algorithms to jack up our premiums. They're not allowed to do that under Proposition 103.
Prop 103 is the Insurance Reduction and Reform Act that aims to protect consumers from arbitrary insurance rates and encourage a competitive market. These proposed changes come as tens of thousands of consumers are getting dropped by their providers across the state.
Last year we had 100% full coverage. Now we have half of that. However, the premium went from $349,000 to a whopping $1.7 million.
My insurance shouldn't cost me as much as my mortgage. If he can't hold their feet to the fire, he should get out of the kitchen.
By law, insurance companies are entitled to rate increases and entitled to a fair profit. But under Prop 103, they're not allowed to pass on the cost of reinsurance. That's another issue being debated right now. Meantime, Commissioner Lara says he's launching local assistance centers near areas of major wildfires to help consumers answer questions and file claims.